Good morning, ladies and gentlemen. Today is December 2nd, 2020, and I'm back with another edition of the Wednesday Live Show. And quick program note, I want to remind you, if you hit the live show page, you'll see a black screen, and if it doesn't start playing right away at 10 a.m. Eastern Time, then you can just hit F5 on your keyboard to refresh the page, and then you will be seeing the show. So, quite honestly, I'm not sure exactly how that works, but I did notice when I was testing it out a long time ago that it seemed like maybe you have to refresh the page. So I don't know. Maybe I should start the show a couple of minutes early and play music or something. But maybe I'll work on a little extra production quality in the new year. But anyway, here we are. Um, Market at all-time highs. Opened a little weak this morning, kind of a nasty little pullback. Yeah, under the surface, there's all sorts of crazy stuff going on. The really hot sectors lately have been like, electric cars, cloud computing, technology in general, and those a lot of those opened considerably lower today, but looks like the market's trying to battle its way back. But hey, who knows? Here's the S&P 500 since the beginning of the year. Since the beginning of the year. So here we are, I mean, kind of in the home stretch here, right? We're in December now, and typically like the fourth quarter is seasonally strong, especially around the holidays, right? But everybody remembers 2018. 2018 was sort of an anomaly because the market got hammered in December, sort of out of the blue. And as I recall, back in 2018 in December, I think I'm not sure about this. My memory's not that good, but I think rising interest rates was the culprit, right? Interest rate, for some reason, bonds were selling off and interest rates were going up, and that was designated the culprit for the big sell-off. But it was kind of unusual. So anyway, here we are. It's been a wild year so far, right? I mean, the year opened and the market had been going up and up and up into the new year, and then of course, the pandemic began here in the United States. The funny thing is like this little dip way back here, right? Started hearing news reports. I mean, I remember watching like the news, the regular national TV news, and they were talking about the COVID in China and all this, and the market was kind of going along, and then it got a little spooked here about the COVID in China, and you know it was kind of, well, I won't say it was obvious, but it was kind of unusual that the market was acting so normal when the potential existed. I mean, it's almost like there was kind of a heads up here, right? Easy to say in hindsight, but it was in the news practically every day ahead of what turned out to be this sell-off, and then this was the short-lived, brutal sell-off. I mean, that was from intraday high to low is about 40%, close to 40%, as I recall. Most of the indexes sold off somewhere between 30 and 40%. But anyway, and then of course the Fed and the Treasury came to the rescue back here in the spring, and I certainly wouldn't have guessed that it would rebound, gain it all back in a straight line, and and then we've had some volatility here since early fall, I guess you could say, right? So this was right at the beginning of September. September 2nd, we hit this all-time high, and it took all the way until just recently with the vaccine news. And you can see, so we're sort of poking at the top of this channel yesterday, all-time high in the history of the world, poked out of the top of the channel. I could tweak this trend line, but it seems, it still seems reasonable. So, a trend line, if you drew this really thick or whatever, it'd be covering up that yesterday, but you can sort of see that we're kind of poking out the top here. One of the interesting things is that and I think I mentioned this last week. There's some divergences in the RSI here, which are kind of interesting. Um, And basically, back here, when was this? This was on 9/2. Yeah, Wednesday, September 2nd. Look at that RSI. It spiked up to almost 83, right? And so here's the market at a higher high. And of course, you've got, I mean, I don't know what it would take to get the, this market would have to just like go vertical from here to get that RSI to match what it was here. So anyway, just little sort of sign, I suppose, of caution, I guess. Even on a very, very short term basis, like just over the past few weeks here, you got a little bit of a divergence in the RSI as well. And that doesn't always mean anything, but technically speaking, it's potentially a yellow flag, right? Not a red flag, a yellow flag. So you've got some divergence in RSI there, and in theory, what you want to see is the RSI making a new high when the market's making a new high, the relative strength. So, but anyway, all that aside, it's kind of a crazy market. The Nasdaq 100 obviously has got a completely different look to it, and there was the January high way back, or I'm sorry, the January high. It actually happened in February here, but there was the high, previous high, which I marked on the chart, and you talk about a V-shaped recovery. I mean, it just blew right through that and kind of went parabolic, right? And so, I mean, this run up from the low to the highs in the Qs before the Nasdaq 100, before even this pullback here, was just extraordinary. So anyway, market acting a little weird today, but um, all that aside, I wanted to look at something real quick before I go over before I go through the open trades and mark everything up. Some of the open trades, we got a couple that, or I think one that triggered today, and a couple that have just triggered in, and so I figured I'd go through and we'll take a look at all those and see where they are. Interestingly enough, like I was saying earlier, the market's made up of sectors and obviously individual stocks, and so while the market itself hasn't really had a correction, the individual stocks that have triggered in obviously had, in order to trigger in, they would have had to have a pullback and then begin to reverse course. So we've had some of those recently. So anyway, this is a great example of why. So Zoom got closed. Well, it triggered in this day right here, right? And so it wasn't open for very long, but sometimes you get like these earnings run ups, right? So you guys recall I deleted the trend line off of here, but because it kind of cluttered up the chart. But there you go. So there's kind of a downward sloping trend line, and then the stock broke the trend line. And anyway, long story short, this has been rolling the really strong stocks this year. Triggered in on this day right here on the 23rd. Actually, it triggered like on the close here on the 20th, and then so it was a buy on the 23rd at the open, and traded right at the trigger price that day. So anyway, it was it was a really short sort of hold there, and let me move that down there. And so anyway, they came out with earnings after the bell. After the bell this past Monday, right? And so as you know, we close it based on the open price before earnings. Since they were reporting after the bell this day, basically got closed at the open. And so this is just a great example of why we do that, because even the darling stocks, and many times it is the darling momentum stocks that they have a pre-earnings run up, the earnings come out, and even though they crushed it on every metric, the stock has a big sell off because something maybe wasn't quite up to par, and that's just sort of the nature of the market. That's been happening for as long as I can remember. You get and we've seen plenty of them go the other direction, right? Like we'll close an open trade ahead of earnings, and then the next day, you got a big gap up and a huge spike up. But as I've mentioned tons of times here on the show, it's just not worth the risk of holding. So, um, so the open here was 485. Trigger price was 431, and so it was a nice little quick trade there for 5 days, but 4 or 5 days. But it's just a good example of why if you had held this thing over earnings, then basically you're right back to where you started, and then obviously if you just held on to it, you'd be underwater now. So you never want to let a profit turn into a loss. And so, part of the way that the system is designed is that the trailing stops are designed to lock in profits as the stock moves in our favor. But this is just a great example of why we don't hold over earnings. So there you go. Um, Moving on, I figured we'd go through these open trades here, and I think I want to start. I want to start down at the bottom here with AMD, which has been open the longest. So you can see that, boy, it's been almost a month now that AMD's been an open trade here and doing pretty well too. Um, got a nice, as of last night's close, it was up a little over 16%, and it's up another 3.5% this morning. So that's been, and we've looked at this a couple of times. Last couple of weeks, I pointed out sort of the symmetry here with this sell-off and rally, and then amazingly enough, a nice kind of long duration, fairly orderly sell-off with a slightly higher low than that, and then this time around, it wasn't as pretty as when it triggered in because there was this gap. There's a lot of gaps on the chart, but so it wasn't nearly as pretty when it triggered in. However, um, the symmetry, if you zoom further out on the chart, the symmetry is still there. It's the big sort of W pattern, and so I marked the compensation target to compensate for this gap here. And I mean, look at how it's just blown right through it. And so this is the idea of, letting your winners run, so to speak. And so as of last night, the trailing stops moved up just slightly here to 86, which is like right there roughly. So I can put that on the chart. Sometimes on these higher price stocks, if it just moves a little tiny bit, I don't even mark it on the chart, but I'll go ahead and put it on there since I'm doing the show and updating everything. So this trailing stop's sitting right below that long range bar there, 86 as of right now. And so you can see how when it triggered in, the stop initially went down sort of towards the low of the pattern, and there was this sort of crazy, gap up, and then it didn't quite fill the gap, but for all intents and purposes, it kind of did because it closed, it poked at the low of that. But anyway, Yeah, AMD is, it's one of the stocks that's just really been on a tear here. And stock market's a popularity contest, right? Stocks, sectors, they come and go from favor. I think there was some news on AMD here today, but anyway, looking really good there. So I would expect this. Well, it might take a couple more days or a day, depending on what it does, but I'd expect this stop to come up here. And we might even see a parabolic stop kick in, and that would basically be on something like this. Quite honestly, until that parabolic stop kicks in, the P stop, and you know that when it does kick in, it's typically like just under like the previous day, right? So, in all honesty, if I was in this, if you're in this, I'd be protecting it right under yesterday's low. Would be a good spot. Would be a good spot to protect that gain. If you want to be really aggressive, under today's low. But once you get sort of a runaway type of move like we're seeing here, then basically you want to kind of tighten your stop as much as possible. So the system trailing stop is designed to be wide so that it doesn't get knocked out on normal price fluctuation, right? And so it's always gonna hang back a little bit. And who knows? I mean, this thing could be still headed. It could pull back and still be headed a lot higher. So, but it wouldn't be a bad idea at some point to consider taking some profits, partial profit. Well, the idea is to take half off at the target and then let the rest ride for whatever you can get out of it. So anyways, looking pretty good there. So let's move on here. HLI. When I first saw this stock, actually when I saw it hit the pending list, I wasn't real keen about it because it's kind of I'd never heard of it. I have no idea what they do. I hadn't even looked it up, but um, it's kind of a it's kind of a low volume stock. It doesn't trade average daily volume like, what I would consider. But hey, sometimes those type of stocks, like look at this run here. And so it really doesn't make a huge difference. But the trailing stop on this is at 63.50 now. Now some of these I haven't marked the trailing stop on, so trailing stops come up pretty nicely here. And this was as of last night, right? The stock finally started pulling away from the trigger price that was up here. And so let me go ahead and mark that. And so now the T stop is at 63.50, and yeah, coming close to the trigger price here. So the actual trigger would have been like right there. So there was a little bit of a push through the trigger. So let's see, the open this day was 65.01. So, add 71 cents to the target. Sometimes when the target, like in this case, the target is basically off the chart. And so it's 67 is the target here. And so basically what you would do is just add the 71 cents to this target to compensate for the difference between the gap and the trigger. So for simplicity's sake, I will just go ahead and mark the target here at the system target, 67 even. And so, of course, like I said, the compensation target would be a little bit higher up here, 67.71 or somewhere in that vicinity. A little bit higher. So looking good though. Obviously, it's like right up against this prior high here before this dip. Part of what I didn't really care for about the stock initially was all this sort of sideways zigzagging, right? I mean, it's been a month and a half just kind of grinding sideways, going nowhere. And so this dip is kind of a small dip. Excuse me. But anyway, it is what it is. It's a pretty nice looking stock overall. Busting out trying to break out the new highs here. So we'll see what happens with that. You know, sometimes you want to pick and choose. GDS is kind of an interesting one because some of these they trigger. There's a trade in them, and then they sell off, and so this was earnings right here, right? And so it kind of sold off, took a little dip after earnings, and then started to rebound, and so it's sitting, it's basically sitting right above the trigger price here. So not looking too bad. The trailing, or I should say, the initial stop. The initial stop here hasn't moved yet, right? The price needs to kind of pull away and move in our favor away from the trigger price, away from the trigger, in order for the trailing stop to move. And so it's basically just been hanging around here. So not much happening there yet. Whoops. Moving down the list, IOVA. So let's see, IOVA triggered on 11/27, which was Friday. Yeah, we had a few of these things that triggered on Friday, and so this one was kind of weird too. On Monday morning, there was that gap up there, and and so I mean, the idea. Let's see, the open was 39.77, which is that's a pretty good. It wasn't much of a gap from the previous day's close, but it seemed like it was pretty high above the trigger price. But as you can see, I mean, sometimes you don't want to overthink it, right? And so the more you try and like micromanage this stuff. So there's a couple ways of doing it. We've mentioned this a bunch of times, but one is you can take a half position at the open, set a limit order to get filled right at the trigger price on the other half, and so you'd kind of be halfway. And as you can see, if you did that, then you wouldn't have got filled on the second half here of the position. If you set a limit order at the trigger price, you wouldn't have gotten filled at all. And so sometimes the ones that actually work out really well, it ends up like not even making any difference or mattering if you pay a little bit more for it. So if this thing ends up with a continuation of this rally up here, it won't matter that that you got in a buck something over the trigger price. So and of course the trigger is kind of like as Jeffrey's mentioned in the past, it's the barrier that the stock needs to close above in order for it to like sort of prove that it's breaking out and changing the direction there. So, boy, if I had just for the fun of it, let me add just some regular old stochastics to this. I think it was last weekend I mentioned that I don't really use stochastics. I don't have them on any of my chart. A long time ago, I used to have like, RSI, stochastics, MACD. I kind of like the MACD a little bit better, to be honest with you. I'll pull up a chart with a MACD and you probably see it going from negative to positive, like right around the same spot. But yeah, it's kind of interesting because I could just tell by looking at the chart that this little sort of dip here, and then look how the range has got really super tight here. That's almost picture perfect. What you want to see is you see a stock that kind of pulls back, and then the pullback kind of ends, right? Those stochastics, look how they got oversold and then literally like crossed, right? And so just kind of interesting to see because in my mind I could just sort of picture the stochastics, selling off, and look, they got right down here to like 20, and then the stock started moving back up, and then you got the stochastic, and obviously just buying a stochastic cross is not necessarily a winning strategy, right? But it's just kind of interesting to see that. So look, you had a stochastic cross, like down around the bottom right here on this day, and then a few days later you got this, and so kind of interesting. But so real quick, let's look at the whoop, look at the there we go, the MACD. This is I'd kind of like to just have the MACD and the RSI. The more indicators I stack at the bottom of the chart, the less I can see the price. Like even on this one, it's a little more difficult to see the price. But let's see what I got here. Oh, that one's just my RSI. There we go. This is the one I was looking for. So you can see the pullback, and the cool thing about this was these couple of really super narrow range days here, right? And a lot of times, a swing trade, ideally, like if you were gonna, have a poster child for a swing trade, it would look something like that because you'd have a range. The range would tighten up, and then you'd get, a couple of like really super tight days and then a change in trend. So, the change in trend, interestingly enough, like the MACD didn't come up and close past the zero line until like basically like right at the point where it triggered in here. But just interesting to see because it's kind of got that nice little sort of curve. I call it a cup, like a cupping pattern, and so it's pretty good looking stock, quite honestly. And it looks like it's, obviously it's going to find a little bit of resistance around that prior high there. But if we zoom out on it, you can see that if it can push a little bit higher, it's in sort of blue sky territory. The only problem becomes, and it's not really a huge problem, but sometimes stocks like to push up and make sort of a nominal new high before they pull back again. So anyway, so far so good. Um, the trailing stop on this has moved up to break even. Right, hadn't marked it on here yet, so that was pretty quick too. And after yesterday, and yesterday was a fairly long range day, and so basically the trailing stop right now is sitting, right at the trigger price. It's not really break even, but theoretically, if like suppose this day, the high this day was 38.20, it just closed a little bit below that, 37.94. So, in theory, if it had triggered in this day and opened here, it would be at break even. But anyway, don't sweat the small stuff is what I always say, because even in a case like this, if this thing gets a little more momentum going on this breakout here, you could see a really nice, you could see a big long range day, another long range day. So looking pretty good. So far, so good. And of course, it's only been open for, a couple of days now, right? This is the third day. So, let's see. Pfizer. Boy, Pfizer in the news. Pfizer kind of had this was kind of a weird way, right? The trigger price was literally on a gap. And so the following day, there's your open price. So there's the buy price, right? We wait for, we see the stock on the pending list, and it's got a trigger price, which I'll show you in a minute. I think I have one that the that's a good example of how the trigger price like kind of floats down sometimes to meet the actual price before it triggers in. But anyway, on Pfizer here, basically, the trigger price was, we were looking for a close over 37.40, and oh, I'm sorry, and so it would have triggered in here. Yeah, not really. And so here was your close above the trigger, and then this would have been theoretically the entry price. And so, this would have probably been a good one to pass on. Quite honestly, I mean that's a little much, right? And it's already sort of a runaway move. So, but hey, Pfizer in the news, but to me that's a parabolic run up, and so quite frankly, yeah, if I was inclined to trade this today, I mean between if I was inclined to trade this and jump in here yesterday, which I didn't, I'd be inclined to probably look to just either protect it at today's low, right? The problem is this thing could gap down tomorrow, right? But you get these runaway moves sometime and they continue to carry, so I'd think about just making this a really quick trade. I mean, this is just one where there's nothing you can do about it. It was sitting on the pending list there for a while, and so in theory, you had like this sort of narrow range day here, and then you had this trigger price, and this particular day, which was last Friday, if it had just closed above the trigger, it would have been a reasonable entry on Monday morning, but the way that it gapped over it and then closed higher and then gapped up the following morning, it just seems like a good one to pass on. It'll be interesting to see what it does from here, right? I could be totally wrong, but I don't see this one like working out so great in the short term. Like I just don't think based on this sort of this runaway gap move that yesterday's open would have been a great. And so sometimes you got to use your discretion because the system itself just can't, it doesn't know what the stock's going to do, right? So it's basically, and sometimes it's the luck of the draw. Like I said, if it had just closed a little tiny bit higher on Friday, then it could have been a great setup. But anyway, let's move on. LITE. It's got a pretty good look to it. Yeah, this is it's kind of it doesn't look so great over here on the left-hand side of the chart, right? But it's a pretty volatile stock. I mean, it can have big moves in both directions, and so it qualifies. Like this little dip here had the run up, and then this little dip here kind of qualifies, and there's definitely a change in trend, right? So you can definitely see the change in trend. Let me go back to my chart that had the MACD on it. Yeah, look at that. So this is a 9 EMA here. A lot of times, price will, when you get these sell-offs, you'll get like a string of days where the price action is below the 9 EMA, and then you start to get some, closes above it. And see, the 9 EMA exponential moving average is part of the MACD here. And so when a stock crosses from sort of below it to above it, that's when your MACD goes positive. And so, what we're looking here is for cyclical type moves in these stocks. Interestingly enough, look at how this day right here, that was kind of the pivot low reversal day, right? Sold down and then opened, and the low of that day was right smack on the 200-day moving average. Kind of interesting. And then it's bounced off of it, and quite frankly, it looks pretty good. So let me go back over here to my regular chart, and the trailing stop as of last night has moved up slightly to 83. So let me mark that here on the chart. So far, so good. So this is actually a pretty decent looking, if you zoom in on it, right? Which is kind of what we're doing here. I mean, some charts are just, the further you zoom out, they look really erratic, but you zoom in like this, and quite frankly, I mean, it looks like it's got a nice little sort of change in trend happening here, cup forming. And so basically, so far so good. Mark that the trailing stop ratcheted up $1, so put that on here. And so the target on this is, look at my other screen here. Target's up at 90. Let me go ahead and put that on here. So yeah, it's going to need to retrace a good portion of that sell off in order to tag the target. And plus, there's a little bit of a gap on the fill there too. Little bit of a gap here on the actual entry. So let's see what that was. These are nice even numbers, so it should be easy. 86.95. So it's $1.95. And so the C target would be 91.95. Let me just mark that on the chart here, so we have it. So it's going to be basically like right up there. And like I said, the stocks just gap a lot these days. The market gaps considerably, stocks gap, and so the system, there's nothing we can do about it. And so, and that's why it's important to recognize that I hate the way that does that. That's why it's important to recognize that the actual trigger, and I've mentioned this for a long time, like you don't need to feel like you got to get in there at the trigger. It's basically just that's the level that the price needs to close above in order to confirm the change in trend, I guess would be the best way to describe it. So, we're looking for a stock that is in a near-term uptrend and then has a pullback and then a change in trend. And in order to confirm that change in trend, right? Like if you think about it, the day before, like this little, let me get this off of here. This little area right here, right? Like this little area prior to where it triggered in, if I zoom out to, there we go. If I zoom out to this, let's see, like, whoops, this is always a little tricky. There we go. So if you looked at this, you couldn't look at this and then say, oh yeah, there's a change in trend here. Basically, that's kind of that's like a potential change in trend, right? The stock sold off, you had that pivot low reversal day, and then you kind of came back up and traded sideways. And so what the system was looking at here, and so this trigger may have started a lot higher, and then it comes down and comes down to sort of meet the price. But in order to confirm that there was an actual change in trend, we wanted to see a close like sort of above this consolidation level, right? So that makes perfect sense technically. And so it just so happens that the confirmation of the change in trend occurred on kind of a long range day and then a little gap up the following day. But it is what it is. It's change in trend. And so anyway, price is looking pretty good here. You got this little cup forming, a little consolidation. And so there you go. And the stop's moving up a little bit. If it gets a little forward progress, this stop will come up a little bit more. So yeah, I think it was up until last week, we reached a point where AMD was the only open trade, as you recall. So I noticed that, and see, here's the other thing too, what I mentioned earlier. Like the market didn't really sell off, but these individual stocks had the type of pullbacks that set them up for, a swing trade. So there you go. All right, only a couple more to go here. This QDEL, this is an interesting one. This is the one I was talking about before, so I wanted to kind of go over a point here. But we looked at this one a couple of times recently, and I noticed, pointed out how it was kind of nasty the way it sold off and then gapped down, but then there was this big rally. And then so you had the same thing here, kind of had this big rally, and then you got the gap down, and then kind of sold off a little bit, and then I put this on the chart, like this little hypothetical markup to point out, kind of what could happen again here, right? But here's the interesting thing is last week, and I left this on the chart here. Last week, the trigger was at 203, and I drew it on the chart here, and I said, hey, we'll come back next week and see, where the trigger is, what it looks like. My guess is if it had broken this little pivot low right here, it would have probably just dropped off the list, right? So if a stock's on the pending list and there's a certain point where it just basically, it's some calculations Jeffrey's got built into the back end, but basically, stocks can just drop from the pending list if they reach a point where if they continue to go down and don't start to recover. But anyway, I'm not sure when this hit the pending list. It could have even been higher than 203, but as of last week, it was 203, and then it came down and came down a little bit, right? And 203 would have been kind of, if I extend it out here, kind of would have been, above like, this little high here. But anyway, I'm going to take that off there because the trigger price actually ratcheted down a little bit, and so it triggered in at 195, and then here's a case where you just got a slight close, 195.05, right? So it closed above it by a nickel, and then the open this day was literally right at the trigger price, right? 195. So there you go, and so looking okay right here. This is almost, and look how tight that stop is, right? The initial stop on this, check everything, look at my other screen. Yeah, the stop on this is like, well, I mean, it's point wise, it's considerable, but in the big scheme of things, it looks like, based on the ranges I'm seeing here, that looks like a tight leash right there. So anyway, looking good. And here's the cool thing about this is that literally, this is one that's still, it's still a potential trade. Like if you weren't in this, a break of, excuse me, a push through 195 would be a good spot to consider going ahead and taking it. So let's see here. The target on this is 217. Looks totally, I mean, it looks totally doable if we get some forward movement. So let's see here. 217. I had to zoom in to get it as accurate as possible. So there we go. It takes a little bit of work to get these charts marked up, but and I have my specific colors that I like to use, right, to differentiate between everything. But there you go, 217, and basically that target is doable on not much of a bounce here, right? QDEL, I'm pretty sure that diagnostic substances, interesting. That looks like it'd be interesting to know what that was about. That could be an earnings gap, right? But sometimes overanalyzing a stock. Um, I remember years ago, years ago, if I was interested in a stock, I'd go back and I'd read all the news and look at, commentary on it and all this stuff. And like you can talk yourself out of every trade just about. Um, by overanalyzing it, right? So, I mean, whatever happened right here, if you really dug into it, you probably think, oh, well, geez, I'm not going to do this. But the simple fact of the matter is that the price can do the opposite of what you expect or what makes sense anyway. So this looks like a pretty good setup, quite frankly. The only thing that bugs me is how tight that stop is. And I mean, it just seems like like a 1 day price move. You could poke up there, a 1 day price pullback could take you down there. That's about the only thing that kind of bugs me a little bit about where this is. It seems like the stop would be a little bit lower, but yeah, system's basing it on the ATRs and the ranges, and so it knows better than I do. Anyhow, let's move on. Last one is this one, which is triggering in today. Right? Basically, and that's why I only have it marked on here. So the trigger price was 48.70, which, let's see, yesterday's open was 48.82. So the trigger price is like down here, right? 48.65 was the close on Monday. And so this is another sort of weird one, right? Closed a nickel below the trigger price on Monday, and then yesterday had a long range day up here. So this is kind of let me just mark that on here real quick. 48.70. That was the trigger price. So theoretically this morning at the open would be like the official entry. And it's pretty big. And then of course, we see this a lot of times too. So when they trigger in, you got like kind of pull that up. 3 white soldiers, right? That was a pretty big move there. And so it's not extremely unusual to see this thing pulling back a little bit. So it'll be interesting to see if it pulls all the way back to the trigger. It's one of those cases where you could enter a half position here, or you can, like I say, you can use some. We've always said that you can use however much discretion you want with this, and so quite frankly, this morning you could have, looked at this and said, well, geez, it's so far above the trigger price. I'm just going to sort of hold off and see what happens. And if you do that, if you miss out on one, it's really no harm, right? Especially when there's a pretty good list here, you can be a little bit selective. And so you can say, hey, this the trigger was at 48.70. And here this thing's opening this morning at 52.12. That's just too much. And so you just kind of hold off, and then lo and behold, it's actually like right now, it's getting close enough to the actual trigger that it wouldn't be and you could like say, okay, I'm just going to set a limit order at the trigger price. Then that's viable too. We've talked about that, over the past couple years since we launched this new strategy, since we launched a new system. Totally viable to literally set a limit order at the trigger price. Some of them are going to trigger and some of them aren't. And the only thing about that is a lot of times some of the ones that really take off and just rip higher don't always trade at the exact trigger price. And so as long as that doesn't bother you psychologically, mentally, then then it's okay to It's okay to say, hey, I got a handful of stocks triggering in here. I'm going to go ahead and just set limit orders at the trigger price and see which ones fill. And so that's totally a viable strategy. So in theory, after this sort of big run up off the low here, can expect to see a little bit of backing and filling, but um, the other thing about this is that it's going to need to. This may be an earnings gap down. That wouldn't surprise me, but it's going to need to get into this gap here, and if it does, right? If this thing can get past yesterday's, maybe pulls back a little bit. I've seen them look like this in the morning, and then by the end of the day here, it's back up in the middle of this range. So um, it just depends. But you've got a nice cupping pattern there. It's just the luck of the draw this morning. It's kind of the luck of the draw. Like if this thing had just closed a nickel higher on Monday, right? A nickel higher, actually 6 cents, I believe, but and then it would have been like a perfect entry, yesterday at the open, and then you caught that low. And of course, it doesn't really matter that much because it's almost back there now. But that's just the way things work. And I mean, look at the craziness over here, right? You had this sell off, and then this day was crazy because stock was sort of in a downtrend. It opened and then pushed all the way down here and took out that low, probably took out some stops right there just by enough to take out the stops for anybody that had a low at the bottom of this little pivot low here. And then it reversed. And then look at the gap up the following day, right? And so maybe that was an earnings run up, but it's kind of a crazy looking pattern. So it's pretty volatile stock. The only thing that I haven't marked on here is the initial stop, and that's at 45.75. Huh. Well, that's kind of weird. 45.75 is, yeah, I mean, it's basically like right here. Super, super tight stop. Anyway, this one's kind of questionable as far as what it looks like from here, but this will be interesting one to follow along and see how it works out, because there's a lot going on here. Like I say, this kind of gap here. Well, after that run up, you're going to see some backing and filling, and so the question is how far does it pull back? Let me extend that out a little bit. So anyway, so that's it. Those are the open trades. On the pending trades list, there's exactly one oh, that's triggered today. There's exactly one pending trade, ABC. Let's just take a look at that, because it's kind of interesting. So basically, as the pending list sort of filled up with stocks that were having their little individual pullbacks, a lot of those are just triggered in because the market itself, has continued to be strong, and so even when individual stocks pull back, if the overall market has been strong, hitting new highs, and as we looked at earlier, these stocks are going to sell off and then kind of rally along with it. So as of right now, this is the only pending trade, and the trigger price, wow, the trigger price is 104. So looking for a close over 104. That's sort of interesting because I guess it kind of makes sense. Let me extend that over a little bit. There we go. If I had a line chart here, it would look a lot different. Like those charts they use on TV, they use like line charts, because those are just basically showing you the close. And so you can see that this thing's poked at 104 a bunch of times, but it hasn't closed above it yet. Past couple of days it poked above it, and it's still And so basically, and this is also a pretty good example of, and I'm just going to put this on here. I'm just going to write that number on here because it can change, right? Like if this thing sells down a little bit more, my guess is that just by looking at the chart, that 104 does seem like sort of the price to beat, right? Like a close over 104. And so either of the past couple of days it could have done that, but that's basically the confirmation of the change in trend, right? So it's kind of interesting. That's where we are in the cycle now with the market, up at the highs. That there's only one pending trade right now. So um, and so that's it. So basically, we got the open trades, and there's a couple there that are still potential trades, and a couple of them that are I tell you, the Pfizer's the one that really gets me though, right? I mean, this sort of runaway move in Pfizer, and of course it's obviously based on the COVID vaccine, but this is something. This is really something. I'm not a huge fan of these parabolic moves to like jump in the middle of it, and so I'd have to probably say that, that this is probably, well, I don't know. It'll be interesting to see how this thing plays out. I mean, sometimes these type of moves, they go crazy, right? And then you put a couple more bars on this, but to me it looks like just sort of breakaway gaps, parabolic moves, so I wouldn't be real keen on jumping in here. It wouldn't surprise me to see this thing, kind of come back down. So, but anyways, there's the other ones to choose from. So, hey, well, thanks for tuning in, and I will see you guys back here same time next week.